Hello, folks. Bill and Brian here with Energy Road for the weekly update. Hey, listen, we are looking forward to what we're discussing today. We're going to talk about crude oil and about some of the realities around it that maybe you don't realize, and maybe some of the things that you said, I knew that. I just didn't know I knew that, which is where
You,
I'm all the time. I always
I
have
didn't
this.
know I knew that,
That's right.
right?
I didn't know I knew that. I knew that, but I didn't know I knew it. So that's what happens as I get older. I knew stuff, then it went away, and then it comes back. So I knew that I knew it, but I didn't know it at the time that I needed to know it. Does that make sense?
When I was a kid, that was my dream job.
That's it. Well, if what I said makes sense to you, we need to get together and have a cup of coffee and talk about things we know that we didn't know we know, but now we know that we know them.
Okay, I'm confused, but let's roll with it. So,
Let's roll with it.
so we're going to talk about crude oil, and we're going to talk about crude oil in a different sense. Most analysts, most people that follow crude oil markets, they look at volume of crude oil, and not all crude oil is made the same. You have lighter crude, heavier crude,
Okay, let's
and
stop right there. What makes the difference? Because when we talk about heavy crude and light crude, we specifically talk about API gravity, not crude oil content.
right.
That's how you get the light and heavy put in there. It's the API gravity. Now, that can be a trick on you when you go to refining because you can have a low gravity crude that may have everything you want in it, but it's been dropped. The API gravity has been dropped by just a portion of what's in the crude. Same thing on the high. If you have high NGLs in it, you still have a nice crude oil, but you just have to get rid of the light ends. So when we talk about light and heavy, we typically start at a starting point of 42 API gravity. You start dropping below 42, then you start getting to heavy crude. You start going up above 42, then you're getting into light crude. So that's the dividing line is 42 API gravity. There'll be some people who say it's 44, 42. So we're just going to say it's right in there.
Okay. And generally speaking, tell me if this is correct. Generally speaking, what is in my mind is if you have lighter crude, you're gonna refine more gasoline. If you have heavier crude, you're gonna refine less gasoline and more of the denser products. So that's generally how I organize it. Is that accurate?
I think when you start talking like, let's start at 42. You get up to the 50, yes, that's correct. You get up to 55, yeah, that's still correct. You get above 55, it's probably not as correct
Okay.
because you have more influence of the light gases of the NGLs coming in.
Okay. All right.
Okay, so I think there's a range there, but generally I would say you're correct. If you're throwing in 50 gravity, 52 gravity, you're going to get more of a gasoline blend because that's going to come out as a lighter.
Now, for everybody watching that is not in the energy industry, we may be talking and you may be thinking this is not important. It is vitally important to all of our energy products and the markets. As a matter of fact, Bill and I were just involved in a long conversation about WTI and Brent and the crude quality because many people think if they buy WTI or if they buy Brent, they're buying and selling the same thing, whether it's on the futures market or whether they're buying or selling crude oil, and it's not. It just simply is not.
And to
So,
point that out, what we say is the crude oil production in the U.S. is about 13 million barrels.
mhm.
But if we counted it like OPEC counts their barrels, it would actually be about 21 uh, million barrels a day,
so
and that's because of the NGLs.
if we look at OPEC's most recent report, it is showing that the U.S. is on their liquids production. Okay, that's how OPEC reports things is liquids production. And then you can see this number, 22.22. However, when we look at crude oil, let me blow this up a little bit. There we go. The domestic production of crude oil is 13.8 million barrels a day. But there's also NGL production. And when we actually track both of these, when you look at our NGL production, it is around 7.5, something like that. So 7.5 plus 13.8, and you roughly get to the same number as OPEC. That is the same qualification. Now, the United States, we typically are watching the crude oil number. But when we look at the global scale, I went to the wrong one. When we look at the global scale, everybody quotes 104 million barrels a day of crude. It's not 104 million barrels a day of crude. It is of liquids. And the reason that that's important is what we're going to talk about today. We're actually going to talk through history of OPEC's production, of shale production, and we're going to talk about how this is actually going to change things in 2026 and beyond when it comes back down to price of oil, price of gasoline, price of diesel, and price of jet fuel. All of those are going to be critical. So when we look at light, when light got heavy, 25% of the global supply is the share of the world's production. And it was only 1% 15 years ago. 10 to 15% heavy crude, 30% on a Gulf Coast mix. And if you want to dive in deeper, you can join our service because we talk about things like this all the time inside. We're not going to go into depth because we would be here, I don't know, all day, and we do try and keep these to 20 minutes. So why does density matter? Light crude has low density, usually minimal sulfur content. Heavy crude usually has high density and elevated sulfur. So what is the difference? Light sweet is easy to refine with a basic equipment. It produces gasoline and naphtha, has lower processing costs. However, heavy requires complex refining infrastructure, yields diesel, jet fuel, and fuel oil. Light crude does as well, just at a lower percentage, and typically has higher refining margins. So that is what we're looking at with the difference between light and heavy. And the trade-off is really going to be that used to make heavy crude the underdog, discounted because of higher processing costs. However, because of the U.S. supply, that's changed. In 2008 to 2010, the shale represented less than 1% of the global supply. It now exceeds 25%. Why is that important? Because when you look at OPEC, OPEC has roughly 15% of their liquids production. And again, we're talking about liquids production. Okay. 15% is that light concentration. Bill, do you happen to know what it is in the U.S.?
In the U.S., I think we calculated around 7.5% is, you're talking about liquids?
Well, you're talking about million barrels a day. It's actually on a percentage of our liquids production.
Oh,
And
yeah,
again,
it's 10 to 15. Yeah.
no, it's 37%. So if you look at the OPEC 22 million barrels a day, and you have 13.8 million barrels a day of crude production, we actually have 37% of our liquids production is in the liquids. So what that means is our percentage, we are getting lighter. Out of 104 million barrels a day, there's a higher percentage of light barrels versus heavy barrels. And that's really what we're talking about. And we're not going to talk about refining. We'll save that for another day. And how heavy used to be discounted because it was more expensive to refine. Now it's actually premium because it has better density to produce some of these products. So what does this mean going forward, Bill? What do we
I
see
mean,
here?
we're going to have to rebalance our whole system because right now, we started exporting crude oil. The reason we had to export crude oil is because it wouldn't work in our refineries. Our refiners needed more heavies than they do lights. And so most of the crude oil we export right to today, which by the way is about 6 to 7 million barrels, if I remember right,
Mm-hmm.
total,
Yeah.
is going overseas to where refineries who can process and refine light crude oil, they have refineries to do that. So we ship it out as light crude oil and bring it back as refined products. And so we will import refined products. Now, when you're following numbers, it's hard to watch that because sometimes they use the the definition of the terms are not the same from country to country to country. That's why we point out about the amount of NGLs that are in this is because that makes a difference of what the quality is. Really, it makes a difference of what you can actually refine out of it and what your
Well,
demand is.
or put simply, a lot of people think, well, we have 104 million barrels a day of crude. It's not crude. A lot
Right.
of that is liquids. Probably over 25% of that is liquids because you can't fill up gas tanks
So
or
when we say
diesel
liquids, we mean
trucks,
natural gas liquids.
natural gas liquids. And we're talking
Yeah.
about ethane, propane, butanes. None of those can be used in combustible vehicles for diesel or gasoline. Now, there are some ways to utilize natural gasoline, which is a denser, usually blend stock in with some heavy crudes.
Right.
That is where you can get interesting. But the reason this matters is because producers need to rethink their portfolio balance, and refiners need to invest in feedstock flexibility, and traders need to watch the differentials because the light premium, the heavy discount, those change and oscillate every single day. And what Bill and I were just embroiled in is that the reason that Brent holds a higher value or price per barrel than WTI? Is it locational or is it quality? Now, if you look at the specifications, Brent, WTI are roughly the same quality, quote unquote. However, this may be underlying why there's a differential there. And so it's important to understand those differentials. And the shale revolution solved for supply, but the next revolution is going to solve for purpose. This is where when we're looking at gasoline, diesel, jet fuel, these are going to be the demand factors that are really going to drive the next wave of production. It's probably going to dictate who produces what and where.
Well, I think a lot of that too is that this is where we start running into the regulatory problem. And then being able to actually create new refineries is a tough thing to happen in the United States. And so what we might see is more export of our crude oil and more import of refined products. Not sure that's the most efficient, but I think that may be where we're going. I think what's important for what we're talking about here is for each one of these group is to realize all of those three group are reactionary to what's happening in the world.
Yeah.
You know, they don't set things, and they're going to have to move to be a little bit more proactive to be able to control their destiny. If not, they'll just be the victim of what somebody else decides. And that's the part that Brian and I have talked about. If you're not paying attention, if you're not looking at all these things, you will not be prepared for what's coming at you. And and the last thing we want to know is, get blindsided by something that we could have known if we'd been paying attention. What we try to do at Energy Rogue is give you those tools
Right.
to help you. In fact, the way we say this is it's really simple. You need to understand the energy market. Energy Rogue is the answer to that. And if you really want to know why, don't hesitate to reach out. We'll explain it in great detail, I promise.
Yeah.
And
And
so
here's the common connect. A lot of people think, well, I don't track energy. Well, guess what? You actually pay for energy every time you fill up your car. And diesel becomes an indicator on the health of the industrial economy in the United States. And
right.
jet fuel gives you an indication of shipments, it gives you an indication of travel. And both of those, these two, these two right here, which we track every single week, those two will tell you what the forward economy is. Like, Bill, are you familiar with the guy that the company that made cardboard boxes? This is before Amazon became as big as Amazon. There was a company and they made cardboard boxes. But he now had to report any trades that he made to the SEC. Do you know why? Because based on the number of boxes, he could predict whether or not the economy was growing or shrinking.
So what you're saying is that back in my college days, when I had that job at the box company where I was
You blew it.
putting 25 boxes in and then tying a string around them, which I
Yeah.
mastered and was actually out of there in 3 days.
Mm-hmm.
Um, that I should have hung out there because I was at the center of the trading world for the
Yeah.
SEC.
Yeah.
Man, this happens to me all this
You
time.
would
Man,
have
all these
been a
little
gazillionaire. A
a
gazillionaire.
gazillionaire.
So, so anyway, a lot of people look at the energy commodity mix and they might think it's not important. Natural gas is important for electricity prices. Okay, if you don't understand the natural gas and how that impacts power prices, gasoline is going to tell you about the consumer economy. Diesel is going to tell you about the industrial economy. Jet fuel is going to tell you two things. You know, the number of shipments from FedEx as well as personal travel. Both of those, I look at jet fuel and diesel as an indicator of the health of the economy. So the key question, where do we go next? This is going to be a question of policy versus technology. It also means that we could be subject to supply shocks and price shocks because anytime our economy is expanding, we need more jet fuel and diesel, right? And so if we are decreasing heavy crude, jet fuel and diesel are contributed a large portion from heavy crudes, not light crudes. And when you look at these questions, the supply and the price shock, we were just talking about it. I'm bearish near term, but very bullish long term because we're not producing the right type of barrels right now. So, and then you have the stranded asset test. If global demand for transportation fuels just declines sharply, will the remaining demand for heavy derivatives, asphalt, industrial fuels, petrochemical feedstocks, be sufficient to absorb available heavy barrels, or will industry witness a wave of stranded heavy oil assets? Good questions.
Yeah. So first of all, we produce all the oil that we can produce financially right now. So
Mm-hmm.
that's why the price matters.
Right.
And as it changes, it's going to be interesting what that does to the price.
Mm-hmm. Yeah. Okay. So a little bit about us. We are Energy Rogue, and we actually, if you click the link down below, you can join one of our two services. Rogue Radar is $89 a month, and that is going to give you everything that you need to know about oil and natural gas on weekly PDF reports with video.
Wait a minute!
Whoa,
Did you say $89 a month?
$89 a month.
You realize that's cheaper than your daily Starbucks?
It is. It's $1. It's less than $3 a day.
Look at that.
Look at
For
that.
that, you can actually become like an energy expert and know when things are going to happen. Oh man, this is cheaper than going to your
Well,
psychic.
why did we offer this price, and why did we create Energy Rogue Bill?
Because we got tired of overpaying people for information that we knew that you could get somewhere else. And as we and Brian and I have both been in this industry for a long time. I tell people I got my first job was throwing dinosaurs in tar pits. But what we really want to tell you is that it doesn't have to be this hard. It doesn't have to be this expensive.
Nope.
So what we did is we designed Energy Rogue to be not cheap, inexpensive, to where if you're using it to help run your business, great. If you're using it to help further your career, even better. Because we literally want to do is provide you a way to success, whether it's personally or professionally or with your business. And we do that by bringing all this information together and not just throwing data at you, but helping you walk through the data to know what it means and what it is. So we like to take data to information, information to strategy, strategy to action. And that's what we help you do. And it is almost a quest for us because the best thing that ever happens to us when we see people finally have that light bulb moment and go, aha, and then their questions change completely and they start asking more important questions. So
Right. Right.
that's the exciting moment for us. And that's why it's at that price, but it's $89. But if you want to go even further, you want to dig in it deeper for $179 a month, that's like buying you and your wife Starbucks. I mean, it's just not that expensive.
And so the key difference, if you wanted to get into the devil is in the details, it gives you access to 150 interactive downloadable charts where you can actually, with a click of a few buttons, you can actually look at the historical 5-year average and where we are on crude oil on our current production. But we also have this for demand, for refining, and you can actually quantify some questions. For instance, one of the questions that I've had is, well, wait a second, really, if you take it back to the end of 2023, yeah, we've grown, but not like a lot. I mean, in 2023, we were already at 13.2. We're at 13.8. Is that a lot? And this is where Rogue Edge really shines, is you can actually get in to trends like this one. This is my favorite chart right here that tells us how much crude oil production we are adding to the mix. And you can see the rate of change is slowing. But for those that are on a busy schedule, $89 a month, and you get access to crude oil radar, which every day is going to give you updated technical analysis, fundamentals, supply, demand, imports, exports, news analysis. It is going to read. We have AI reading 50 to 150 articles every single day and coming up with a sentiment. And then we also have a summary of OPEC's most recent report and what that means. And if you, OPEC provides a fantastic report, but you can see it right here. It's 92 pages long. So if you have time to read 92 pages, great. Go get OPEC's monthly oil market report and dive into EIA. We know because we delivered this type of content for or this type of analysis for companies like Chevron, Sumitomo, Louis Dreyfus, so that we could quantify the market. And we spent over 30 hours a week and we thought there has to be another way. So what we did is we developed a system that allows somebody to get 30 hours of research in 5 minutes a day with Rogue Radar. And then for those that want to go in a little bit deeper, Rogue Edge is going to save you from 60 hours a week
Right.
into probably 10 hours of research.
And folks, it's going to come to you. You don't have to come to it. You're going to get
Right.
it in the email every day, and you're going to be able to do a quick before you go into that first meeting of the day. You'll know where things are going, and you'll be able to be that guy in the meeting that has the information, who asks the questions. Why are we doing this when prices are going down or when prices are going up? So that's where it comes to. It comes to you. You don't have to worry about you going to it.
Yep. So click the button down below. It's a 14-day free trial. You can try it out and see if you like the videos, if you like the PDFs, if you like Crude Radar and Rogue Radar. All of those are included with Rogue Radar. And for those that want to upgrade to Rogue Edge, it's only $179 a month, and everybody that has used this in the energy industry as well as independent traders and hedge funds has said, well, we need to be charging at least 10 times for this, but we're not going to do that. No,
That's right.
we're
For
not.
wizardry school here in America?
Yeah, totally. There definitely is. Well, that's all I got. Any parting words, Bill?
Listen, folks, we're getting into Christmas time. We're getting where the giving time is. And so, what we ask you to do is just go out and be nice to somebody and just tell somebody how much you're grateful for them. And you will be able to help Brian on his gratitude journey if he knows that he spread a little gratitude throughout the world. And if you do that, just send him an email and just say, "Hey, Brian, I talked to somebody, told them how much thankful I was for you." You will make his day. I
Oh yeah,
promise you.
yeah,
You will make his day. So
definitely.
go out, be grateful for someone. Don't be grateful for things. Be grateful for people.
That on that note, that is a great place to leave it. So be kind and spread the joy, spread the gratitude. So thanks so much for being with us. We look forward to seeing you inside, and we will talk to you next week.
Be sure to subscribe.